Hey everyone, let's talk about something that sounds complicated but is actually your best friend: reconciliation. What is it? Think of it like a conversation between your QuickBooks account and your bank statement. You're just making sure they're telling the same story. It's the process of matching every dollar that left your bank with every dollar you said left in QuickBooks. The same goes for money coming in. It sounds simple, and honestly, it is. We're just checking the receipts to make sure nobody got the order wrong. It's financial fact-checking, and you are the star journalist. So, why does this even matter, especially for your checking account? Well, imagine trying to drive a car while guessing how much gas is in the tank. That's what running a business is like without reconciling. Reconciliation is your fuel gauge. It finds those sneaky little transactions you forgot to enter, or even worse, transactions that were entered twice. It catches data entry mistakes before they become big, scary monsters. Most importantly, it tells you your true cash balance. This isn't a guess. It's the real number you can use to make smart decisions. It's also crucial for things like audits and tax time, which nobody enjoys. This simple process is the difference between financial chaos and financial clarity. It's about knowing, not guessing, where your money is. When you reconcile, you're taking control. You're telling your money where to go instead of wondering where it went. Think about it. You wouldn't let a friend borrow your car without knowing when they'd bring it back, right? Reconciling your checking account is just holding your finances accountable. It ensures that the story your books tell is the absolute truth, which is the foundation of any successful business or even just solid personal finance management. Reconciliation is your secret weapon against financial surprises. So, when should you do this magical reconciliation? The best practice is to do it every single month. As soon as your bank sends you that monthly statement, it's go time. Think of it as a monthly date with your finances. It keeps the task small and manageable. If you wait too long, it's like letting laundry pile up for 6 months. It becomes a huge, daunting chore. You should also reconcile after any major financial events, like a huge payment coming in or going out. And at the end of the year, it's absolutely non-negotiable. Your year-end reports have to be perfect. Before you even click that reconcile button in QuickBooks, there are a few things you need to do. It's like stretching before a workout. First, make sure you've entered all your transactions for the month into QuickBooks. Every check you wrote, every deposit you made, every debit card swipe, get it all in there. Next, categorize all that income and all those expenses. This is what makes your reports useful later. Also, it's a good idea to update your bank feeds one last time to pull in the very latest data. Finally, have your bank statement ready. You can have it on your screen or print it out, whatever works for you. Let's quickly review those pre-game steps. 1. Get all transactions into QuickBooks. Checks, debit card purchases, deposits. Don't leave anything out. 2. Categorize everything. That coffee with a client is a business expense, not just miscellaneous. 3. Update your bank feeds. This syncs QuickBooks with your bank and can save you a lot of manual entry. 4. Have the statement from your bank in your hand or on your screen. This is your source of truth, the document you'll be matching against. All right, you're ready. Let's dive into the Reconcile tool in QuickBooks Online. First, you'll navigate to the Accounting section on the left-hand menu. From there, you'll see a tab that says Reconcile. Go ahead and click it. QuickBooks will then ask you to choose which account you want to reconcile. You'll select your checking account from the drop-down list. Now, look at your bank statement. Find the ending balance and the ending date of the statement period. You're going to enter those two pieces of information right into QuickBooks. It's that simple. Once you've entered the statement info, QuickBooks will show you a screen with two main columns. One side lists all the payments withdrawals from your account, and the other side lists all the deposits credits. Your job now is to go down your bank statement line by line and check off the matching transaction in QuickBooks. As you check items off, you'll see the numbers at the top change. You're looking for a specific target, a difference of 0. It's like a game. Match the transaction, click the little checkbox, and watch the difference get smaller and smaller. But what happens when something doesn't match? For instance, you might see a deposit in QuickBooks that isn't on this month's bank statement. This is likely a deposit in transit. Let's say a customer paid you on April 30th, But the bank didn't process it until May 1st. That deposit won't be on your April statement. That's okay. You just leave it unchecked in QuickBooks for now. It will show up on your May reconciliation. The same thing happens with outstanding checks. Then there are the bank's own transactions, like service fees, interest earned. These will be on your bank statement, but they might not be in your QuickBooks yet. No problem. QuickBooks has a handy feature for this. Right there on the Reconcile screen, you can click Add New Transaction to quickly enter things like a $25 monthly bank fee or the $5 in interest you earned. Just make sure you categorize them correctly. Bank charges for the fee and interest income for the interest. This ensures your reports stay accurate. These little adjustments are often the key to getting that difference down to zero. Sometimes, even after you've checked everything, the difference isn't zero. Don't panic. This is where you become a financial detective. The most common culprit is a simple data entry error. Go back and compare the amounts. Did you enter $540 as $450? Find the transaction in QuickBooks and edit it to the correct amount. Missing transactions are another common issue. Scan your bank statement for items with no matching entry in QuickBooks. If you find one, like a missing 1/15 bank fee, use Add New Transaction to enter it. Every little adjustment gets you closer to that $0 difference. Make QuickBooks a perfect mirror of your bank statement. What if the beginning balance is wrong? QuickBooks shows a beginning balance when you start to reconcile. It should match your bank statement. If it doesn't, a previously reconciled transaction was changed or deleted. Use QuickBooks tool and past reconciliation reports to find where it went off track. Golden rule: never, ever delete a reconciled transaction. Finally, duplicate transactions. Bank feeds can import a transaction twice. Two identical entries for $1.50 but one on the statement. That's a duplicate. Delete one duplicate in QuickBooks. Be careful to delete only the extra one. After checking amounts, adding missing items, and removing duplicates, the difference should hit $0. That's when you know you've succeeded. When that difference finally hits zero, you get to experience a moment of pure accounting joy. All your hard work has paid off. At this point, a big green Finish Now button will appear. Go ahead and click it with pride. QuickBooks will then save a snapshot of this reconciliation. It generates a reconciliation report. This report lists all the transactions that cleared in that period, deposits in transit, outstanding checks. Always save this report. It's your proof of a job well done and is invaluable for audits or just for your own records.